Hello, traders. I hope all of you are doing well. Welcome back to Your Nifty Guy. Before we jump into the charts, I want to remind you that trading is all about preparation. The more clarity we have going into the day, the easier it becomes to trade with confidence. So, in today's video, I'll be sharing the exact levels I'm tracking for tomorrow, the possible market setups that could unfold, and how I plan to trade them. Watch closely till the end because even a small insight can make a big difference in your trading. And before we dive in, don't forget to hit the like button, subscribe to the channel, share this video with your fellow traders, and drop your thoughts in the comments. And on that note, we'll start with the charts. We'll keep the video very short today, short and concise. There's nothing much to do actually. Today again was a no trading day for me. It was an extremely sideways expiry. I had clearly mentioned in yesterday's video that this particular zone between the two red lines will be a no trading day, no trading zone for me. And we were ready to short these markets below this particular low. And just like yesterday, this is again uh, amplifying the power of pullbacks and why we should always use pullbacks before we trade any breakouts or any breakdowns. Yesterday, this was the day low breakdown, immediately reversed. Anybody who would have shorted blindly at the break of previous day's low would have been brutally trapped. The same thing happened. This red line is yesterday's low. We got a closing below this. We got an inside bar, beautiful inside bar, and then the market simply reversed. So anybody would have blindly shorted the markets around at the break of yesterday's low would have been trapped around here. Similar thing happened again near the end of the day when markets again broke down around the same levels, broke down below it, and then immediately reversed. The selling did not get a follow through, and anybody who would have traded without a valid pullback at the simply at the break of the prior low would have been trapped. So that is the reason why I always tell you guys to make sure that any breakouts or any breakdowns that you are trading, make sure to trade enter into the trade only after a valid pullback. Right? This could have been a beautiful trade had it not reversed, and if we would have again gone down after this good inside bar below this particular thing, we could have traded with the stop loss just above this inside bar, and then we could have got a good trade on the downside. But then again, it is what it is. We are prepared to trade anything and everything, but then market has to confirm to us before we enter into the trades. Like let the markets commit to you before you commit to the markets. It wasn't completely sideways expiry. And yeah, another thing about the monthly expiry setup, which is there. So we were roughly trading around 24,650 on an average throughout the day. There was a huge amount of call writing at 24,700 and a good amount of put writing at 24,600. So I was actually also keeping an eye on whether people are exiting any of these strike prices. The chances came good around here when markets actually broke down post 2 p.m. below 24,600. But then if you go and check the change in OI, not many people exited, right? And as soon as the market showed slight the next candle which was there, in fact positions were added at that particular point, right? So that simply meant that people are not going to exit, and for that expiry move or that expiry trade to play out, you actually need people who have uh, or levels where there is a huge amount of call writing or put writing, and then the market breaks those levels and those people are forced to exit their short trades. That is where you get a good either a short covering or a long unwinding, and that is where you can make good amount of money with a very small risk and actually treat it like a hero zero trade. So again, nothing of that sort happened today as well. So expiry setup also did not play out anything today in the markets. Now for tomorrow, we'll look at the daily time frame candle first. Again, the selling seems to be slowed down, but then again, this is one, two, three, four, five, six, seven, eight, ninth consecutive red candles, right? Where Nifty has closed below its opening, and this is something which is a very rare phenomenon. But then, nonetheless, this is because of the continuous, relentless selling by FIIs in the Indian market. But then again, we are not anybody who can control anything that is going on in the market. So instead of predicting, what we do is we prepare ourselves so that we can make the best use of whatever move the big money wants to get in by being a part of a small journey in the entire move that they create, right? So somebody had asked me about RSI divergence on a 4 hour time frame. So I'll quickly show you. Basically, RSI divergence we need swings, right? So at a swing, if RSI is compared to the spot price, if RSI is making a higher low, that is where RSI divergence falls into place. But if you look at the 4 hour time frame from around this time period, it has completely been falling in a one-way direction without giving us any proper swings. Had it given us any proper swing around here, then with the low being broken, and then if we could have seen a divergence, that would have been there. So there is no divergence that is being observed on the 4 hour time frame as of now. Like for 75 minutes time frame, I will show you the market is clearly making swings, right? New swing lows are made with valid pullbacks on the upside. And similarly, the lows, the bottoms, right? We compare the bottoms on the price with the bottoms on the RSI at the bottom for positive divergence. And that is the reason what we can see here is good positive divergence, which is there on a 75 minutes time frame. The structure is still intact with lower highs and lower lows. But then again, I somehow feel that the selling is being arrested right now, as is being observant on all major time frames on 15 minutes, be it 5 minutes, be it 75 minutes, and we can see some consolidation around here, right? Prices have consolidated very, very well. So we'll keep the plan of action very simple again for tomorrow. Below today's low with a pullback, we'll be creating a short trade. I'll take this particular swing high just to be very, very sure. We can also enter into the trades at the break of this particular swing high. This will form a something like a double bottom around here, wherein the slow is not being broken and with this high gets taken out, we can enter in long trade. But for safety's sake, because right now the markets are volatile, we'll keep this particular swing as our entry criteria for any trades on the long side, right? We can also trade as per the break of the trend line as well. So a lot of the trading will also depend on where the markets are actually opening tomorrow, right? So in case if we open flat around between this particular sloping trend line and this flat uh, today's bottom, and then we break out on either side, we can, yes, around here, we can create an early entry as well on the long side. And why do I tell about creating an early entry on long side is because there are signs on the market in terms of RSI divergence, which is prevalent on majority of the time frames on the smaller time frames as well as on the medium time frame, which is a 75 minutes time frame or a 1 hour time frame. So keeping that into mind and the selling which is actually being slowing down, we can actually this is a good amount of good consolidation. So we can look for a trade on the upside as well. So that is something which I will leave to your decision. Where do you want to enter? If you want to enter at the break of the trend line, whatever you are trading, either is it a trend line breakout, is it a swing breakout, make sure to trade only with a valid pullback, right? So I hope the simple, sweet trade plan for tomorrow is clear. Once again, keep your trading to bare minimum right now. Let the markets give us some more clarity, and then we'll be going ahead with the usual quantities. Till then, reduce your quantities would be my suggestion. So that's it for my trading plan for tomorrow. Remember, the market will always test your patience, but discipline and preparation make all the difference. If you found value in this video, don't forget to like, subscribe, and share it with your fellow traders. And drop a comment with your thoughts or questions. I would love to hear from you. I'll see you in the next one. Until then, trade safe, stay disciplined, and keep growing. And I'll leave you with this thought: opportunities don't happen, you create them. Thanks for tuning in, and cheers.